Hello, good weekend to all. I'm bringing you a review of the US markets from an inter-market analysis perspective for Monday's trading, the 16th of March 2015. Okay, right, how can we tackle or understand the US markets? Let's start by looking at the close. Friday, Dow down 150, Nasdaq down 23, 22 points, and the S&P 500 obviously down 12 handles. So negative close. Why was a negative close? Okay, negative close basically summarizing the weekend's articles from a journalist and a traders or analyst point of view. Okay, so journalist stroke analyst fall on Wall Street on concerns. The stocks fell on Wall Street on concerns of the impact of higher rates and a stronger dollar. So make sure you highlight that: higher rates, stronger dollar. Higher rates, stronger dollar. So based on fundamentals, as we all know, when the expectations rise with regards to rates, obviously that leads to a stronger dollar. Okay, so obviously higher rates means that obviously they're going to get a greater rate of return, therefore obviously demand for dollars will be higher. Okay, so obviously that the dollar will then rise against its peers, and as you can see with regards to the dollar index chart, looking at a daily chart whilst we're talking about dollars, let's bring this up for you. Here we go. The 10-minute chart certainly looks exhausted, but a daily chart, as you can see, bullish, 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 and the trend on the daily certainly remains strong. 60-minute, we are looking at potential pause now, given the fact that obviously the Fed's on dock on Wednesday, so we'll see exactly what they have to say. But my perspective on things in a dollar whilst we're on this subject is that this is now going to be bearish, and we are looking for a potential reversal on the dollar, given the fact that we've got unfilled gaps below. And going into the Fed, I don't think they can afford to be hawkish any longer, given the fact that it's started to impact emerging markets and hurting emerging markets, and that's a concern for, and also hurting US stocks as well. Obviously anything that's hurting US stocks or derails the rally in the US stock market is certainly negative. Talking about emerging markets, I'll bring up emerging markets for you quickly. Let's see if I can find this. Come on, come on, come on. Here we go. Emerging markets, as you can see, quite a substantial sell-off. Okay, I did highlight the fact that we are looking at a topping tail in emerging markets. That certainly needs to be observed. Although I did overlook that because I was swing long FTSE and I didn't take that into my analysis. So I did pay the heavy price because I got stopped out on the FTSE minus 200 this week. So that certainly wasn't good from a swing trading perspective. But we live and learn, and the stops are there to protect us. Okay. Now, given the fact that obviously India had been rallying, China, obviously rate cuts, etc., I didn't expect emerging markets to sell off quite substantially the way they did. Obviously the market thought otherwise. Even with the European markets rallying, I expected emerging markets to remain supported. Obviously that wasn't the case. So we all live and learn from our mistakes or our bad trades. Okay, so again, that's something that I'm going to take into account next time and give more precedence to the emerging market potential top. Okay, so given the fact that we had obviously excess liquidity in the system, I mean you got the BOJ, you've got the ECB doing QE now, so given the fact that your unfilled gaps above, yeah, obviously QE helps commodity prices, and obviously that helps emerging markets, blah 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 blah. Okay, so etc etc etc. I'm not going to make this video long and give you a lesson on fundamentals. I think a lot of you are more interested in which direction the market's going rather than the history. Okay, so basically at this very juncture we have a potential bottoming tail in emerging markets, which generally signals to me that the dollar is now at a potential top. Therefore, given the fact that the Fed is on dock this week, they will obviously have to be, whether they want to be or whether they interpret it as being dovish. Okay, that's my interpretation. Dollar index, given the fact that if you look at dollar index on a 10-minute chart basis, so if I just bring up the dollar index, bear with me. Here we go. 10-minute chart certainly looks exhausted. You got an unfilled gap below initially, and then obviously you've got plenty of unfilled gaps below to close. So certainly exhaustion from my perspective, and the 60-minute chart is looking exhausted. Why do I say exhausted? Not only am I looking at it from a just a purely US dollar chart perspective, I'm looking at other charts as well. So for example the Euro, Kiwi, Aussie, especially the Kiwi. Watch out for a potential pivot low and a powerful reversal on that, given the fact that they've held rates. Again, that's something that I might cover in a separate video with regards to the Aussie and Kiwi and the Euro. But for now, just obviously bear that in mind. Potential dollar top and a reversal. Now the reason why I argue with regards to the dollar top is because the inflation data out of Germany and France came out stronger than expected on a Thursday and Friday. Okay, you had anti-QE comments from Mr. Wiedemann, and you had Mr. Holland describe the currency as comfortable. Okay, the current level of the euro is currently 1.05. and that's been described as comfortable. Okay, that's very interesting. And also given the fact that Euro GBP has put in a bullish engulfing candle on a daily chart, again that puts in a potential pivot low for the euro. If that's a pivot low for the euro, that puts in a pivot high for the dollar. Okay, and given the fact that the correlation this week has been with regards to the S&P 500 has been the fact that, and this is very interesting, this is very not interesting, folks, this is for all the S&P traders, all the US market traders out there that look at charts and glorify their charts and respect the charts and so on and so forth. You must respect intermarket analysis, and you must also respect obviously fundamentals as well from my trading strategy and perspective. As you can see, I don't use any indicators. I don't give much credence to them because they are lagging. I do respect them, and I respect every trader out there that obviously utilizes them. Anything that gives you an edge, go ahead and utilize it. Okay, but it doesn't give me an edge. I don't see that. I find them lagging, and I certainly not very helpful in my understanding. Okay, because they distort my view of the markets. That's my perspective, but that's my trading strategy. Okay, and my trading strategy is based on multiple analysis of multiple variables that can diverge and converge. If you have a different trading strategy that's based just on price action, then obviously you need as many lagging or leading indicators as you can to indicate and obviously generate the next move in the market. So anything that gives you an edge and it works, thumbs up from me. Okay, this market's tough enough for us to argue with one another. Okay, so here we go. Okay, so this is very important. The euro has put in a pivot low. The dollar has put in a pivot top. The S&P 500 has been inversely correlated to the dollar and positively correlated with the euro. You can do that. You can observe that by mapping a chart of the euro USD onto the S&P 500, and you'll see that there's been quite a strong correlation. There's been a negative correlation between the euro USD and obviously the European indices. Okay, so what my thesis or my argument is this week is that the European indices will pause. The reason being is because, or they may well pause potential sideways, and they could even float up following US markets. That's certainly an argument, given the fact that QE is certainly a central bank put, etc., etc. But I do think that US markets and UK markets in particular, the FTSE 100 in particular, will certainly outshine the rest. That's my understanding, and that's my understanding based on the US dollar putting in a top, given the fact the fear of afraid of the Fed this week being dovish, and all the hawkishness has been priced in. The rate rise has been priced in, from my perspective, into the markets already. Okay, so the fact that if those two theories, or that theory upholds or holds throughout the week, okay, i.e. the euro holding the 1.05 level and not falling substantially below, the euro GBP holding its level, not falling substantially below, euro JPY holding its level, not falling substantially below, the dollar index starting to come off, that should obviously help commodities rise. Okay, commodities rise, and that will help the FTSE 100 go higher, and obviously European indices may well catch a drift of that, but not as much or not as potent as US markets will, because that dollar fall will certainly help US markets and to play catch up on the upside. Okay, so if that's the case, and we put in a pivot top on the dollar, a pivot low on the euro USD, if you just look at a daily chart, the euro USD, you can see it certainly doesn't look very healthy at all. 60-minute chart is putting in a potential double bottom, so it's all about this double bottom here at 1.05. We can hold that and start to reverse, and the dollar index starts to fall. Obviously, there's a lot of variables that must, or preconditions that must be met for this. Okay, then you will see the S&P 500 holding this key trend line. Okay, holding this key trend line. Okay, it's an inside bar, as you can see. That red candle consolidated within the green candle, held the key diagonal trend line, held a fib 61 to 50% retracement. Okay, and then we are looking for a potential bull flag. Okay, so what we are looking at here is inside bar consolidation, held the upper 50%, bang, off we go to the races, and we test these highs back up here again. Okay, that's basically the situation. Obviously, that's obviously relying on the fact that the euro puts in a pivot low, or alternatively the euro may well float lower, as long as the dollar puts in a pivot top. That's the important thing. Okay, and that may well be versus the Aussie and the Kiwi, etc. So again, that's interesting. Okay, pivot top, that's what it's all about, the pivot top. Now, one of the charts that's quite interesting with regards to a dollar putting in a pivot top is a USD CHF. The USD CHF is back at those levels where obviously we had this crash. Okay, and given the fact that that's classed as the nightmare scenario, or revisiting the crime scene, so to speak, again, and given the fact that it's an inside bar, and this bar has dictated price action, and the dollar obviously has retraced almost everything. This is, I mean, if there's no the stronger sign that the dollar index is at the top, this, I mean, what else is? Okay, what else is? So from my perspective, the dollar index is at a top. If the dollar index is at a top, and the reason why the S&P 500 in the US markets are sold off is because of the dollar related or dollar linked move, i.e. hurting corporate profits, i.e. interest rates rising, and obviously that's going to hurt disposable income and so on and so forth. You can argue as much as you want from a fundamental perspective. As long as you realize the inverse relationship between the dollar and the S&P 500, I can sit here all day and talk about the negative impacts from a fundamental point of view, okay? Going back to my textbook at university, etc. That's irrelevant, really. I mean, once you know the notion, and you know the theory, and you know the understanding behind the reason why there's an inverse dollar relationship, which a lot of you should be educated enough now to understand, okay? Those that don't, just adhere to basic economic theory, or obviously go through any economic textbook, and you'll learn and understand that the dollar is obviously at the crux of almost every market in the world. Obviously, it's a reserve currency, and it dictates the export side of the equation. And obviously, given the fact that we're in currency wars right now, every central bank or every nation wants to deport its currency, and obviously win this global battle. Now, there's a very good article that I retweeted in the Daily Telegraph. For those of you that follow me on Twitter, certainly I would encourage everybody really to read that article. I think it's very, very important, very, very important, that article. I mean, I'll see if I can read this out to you. Here we go. And this is a very good article. I encourage everybody to read this. Here we go. Okay, right. So, global currencies made front page headlines. You may quite rethink that economic fundamentals such as GDP and growth, cross-border trade flows still drive exchange rates. Unfortunately, though, you'd be wrong, for we live in the age of extraordinary monetary measures, as we all know, and central bank diktat. That may sound like a remote jargon-laced musing of a nerdy economist. True. Okay. I'd say in response to that, the recent actions of Western central bankers are provoking not only heightened market volatility, but also increasing international conflict and the looming prospect of another Lehman-style systematic lurch. Okay. The dangers, sadly, are very real. Currency dealers and the ubiquitous computerized trading robots are influenced far less these days by growth or inflation forecasts, which is true. Obviously, they have a mind of their own now, than by the market's view on the origin of the next splurge of quantitative easing, i.e. they want to follow the Kool-Aid. Okay, that judgment is driven in turn by the coded missiveness of central bankers like the U.S. Federal Reserve, Janet Yellen, McCartney, obviously, particularly in these recent months of Mr. Draghi. Why did the euro fall to almost 1.05 last week, a 12-year low, having dropped some 12% against the greenback since the start of the year? Okay, the main reason is the ECB long-awaited QE, blah blah blah. You can learn what QE is over here. Let me just get this plug-in organised. Okay, like some of the horse whisperers, Draghi then commented that the eurozone economy is now pointing in the right direction. Blah 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 blah. Okay, now the interesting thing here is, as such, at the time of writing, the single currency has dropped over 6% in 6 days, a pace of decline seen only since the euro was launched in 1999. And that was just after the 2008 Lehman Brothers collapse, which is quite interesting. Okay, the other major cause of the single currency's recent fall is the Fed having already indulged in its own vast money printing program, which saw America's central bank expand its balance sheet there threefold as a percentage of annual GDP over 5 years, could soon be weaning itself off the monetary steroids. As we all know, Kool-Aid. Okay, basically the patient has come off the life support machine, or the patient is off the morphine. Okay, so the patient is now currently basically going cold turkey, hence the reason why the US dollar index is rallying. And also the additional geopolitical concerns are with regards to Putin. A lot of individuals are speculating with regards to Putin, obviously not around. He's been missing for a few days ever since that individual got killed, Mr. Nemtsov, and there could be some sort of revolution brewing there, etc., etc. Okay, so again, that's just looking at it from a different connotation. I'm not going to go into geopolitics and socioeconomics, obviously the reasons why the dollar can rise. This is something, again, going back to my economic textbooks, and that'll be able to elaborate out there. As such, for the first time in almost a decade, US interest rates may be about to go up. as we all know. Expectations are rising ahead of a key policy-making meeting this weekend. Obviously, the Fed will drop its pledge to be patient. I think we've heard that a lot of times now, and everybody realizes that's the reason why the dollar index is going higher. Pointing to a rate rise perhaps as early as June, such a prospect, of course, pushes up the dollar, which we all know. Okay, so you can carry on reading this article. It's very good. I think it's very informative, especially for newcomers to the markets that want to understand QE. You can find it on Dailycraft's website. It's called Currency Wars Threaten the, no thanks to this, a Lehman style crisis. Very, very good read. Very good read for those of you that want to obviously educate yourselves. Okay, so going back to the USD CHF, given the fact that this market, obviously this USD CHF caused quite an impact. Obviously all those traders that were potentially long and got stopped out and knocked out and so on and so forth, they must be very pissed right now, because obviously the markets are retraced and go back to their original positions where they were stopped out for whatever reason. Okay, given the Swiss debacle, etc. I'm not going to go into that again. That will make this video very, very lengthy. So given the fact that we're revisiting the crime scene, given the fact that the QE, shall we say, given the fact that we're revisiting the crime scene with USD CHF, which is a key component of the US dollar index when it comes to the basket, the US dollar basket, the US dollar index, as we all know, if you have a look at, if you just Google or if you search for the components of the US dollar basket, obviously CHF is quite an important factor, along with the euro, along with obviously sterling, or along with Kiwi dollar, etc. So it's the Aussie dollar. And obviously the Euro USD, which is almost 50% basically of the dollar index. It's basically telling me that the dollar has potentially put in a pivot top. Okay, that's basically what price action is telling me. So if I have the assumption that the euro is putting a pivot low, the Kiwi has already confirmed a pivot low, which again should confirm pivot low in Aussie potentially, although there is a lot of fundamental arguments against that. But I'm not going to go into that. That's a separate concept. I'll discuss that. I'll try and make a video on the Aussie and the Kiwi over the weekend and discuss the permutations and the connotations there. But for now, I'm just going to focus on this. Okay. So my thesis or my argument right now is that the dollar index is put in a potential top. The euro is put in a pivot low. The euro is linked with the S&P, therefore the S&P is put in a pivot low. Okay. And the euro and the dollar is linked with the S&P, therefore the S&P is put in a pivot low. Okay, based on those assumptions. Okay, I had in the argument with regards to CHF, I had in the argument with regards to Mr. Wiedemann and the inflation figures out of Germany and France being stronger. You can get multiple arguments now gathering that basically the euro is potentially going to rise. That will obviously, Kiwis are already risen and will rise, and the Aussie dollar will obviously go with the flow. Okay, although it is lagging slightly, and I'll discuss that later on. Okay, so that's basically where we stand. So can you see how I've used the currency markets and obviously amalgamated the indices? I mean, I'm not even discussed the bond market and the commodities market because this video will go too long. Okay, but that's just my understanding of things right now. Okay, so now that we've understood the fundamentals, okay, given the fact that the Fed is obviously on tap on Wednesday, and like I said, they are not going to be as hawkish as they've sounded, given the fact that it's impacting the markets. They have to calm and cool the expectations, because the market is all about expectations, given the fact that it's got an efficient market hypothesis theory, and the fact that it factors in and basically incorporates everything into the market. Okay, so that's the important aspect there. Okay, so the S&P 500 from a technical perspective now. This video has gone on long enough. Okay, so I'm going to wrap this up now from a technical perspective. Daily chart, bullish engulfing candle, that has held. Okay, this diagonal trend line support has held. Fib 50 to 61% has held. Upper 50% of the green candle has held. The pivot low or the bottoming tail was exactly at a diagonal trend line. Okay, so there's multiple reasons why this chart is going to hold. Okay, and will potentially move higher. 60-minute chart of the S&P 500. I've said this time and time again. The HNS once completed creates a short squeeze. So whenever HNS target reaches its reaches its target, HNS reaches its target, it creates a short squeeze. Okay, so we've had a bullish engulfing candle and the market rallied. We've gone and retested that same level and we've held it. Therefore, we are looking for a potential short squeeze and a reversal higher. A 10-minute chart of the S&P, and also one thing to note here as well. Excuse me. Look at the rise in volume. Okay, very, very impressive. Rise in volume, very, very impressive. Okay. Look at the flush, rise in volume on this flush. Rise in volume on this flush. That generally tells me There's a rise in volume here. I mean, let me put these in. Okay, so rise in volume here at this flush. Rise in volume here at this flush. What happened? Bang. Okay, so that's telling me from an intermarket, well, not even intermarket, it's from a technical perspective, really. I mean, I've already given you my thesis on intermarket analysis, given the fact that the euro dipped below 1.05 and then rallied, and obviously that took the S&P 500 with it. Okay, but again, I'm not going to make this video long. Basically, from those that understand and study price action, you know that whenever you get higher volume on a flush, that generally signifies a bottom, i.e. hence the reason why you get a bottoming tail. Okay, right? So same thing here. We've had this flush and this rise in volume. Okay, now on this occasion here, given the fact that we flushed and we've had the rise in volume on the flush, now we're getting a rise in volume on the buying side. So that's generally telling me that 2040 is one hell of a support level. That's basically what I'm going to say, just studying price action on a 60-minute chart. Okay, I've already studied it on a daily chart and I've come to a conclusion it's bullish. 60-minute chart, I know it's bullish, and technical analysis is telling me it's bullish. Okay, right. 10-minute chart. 10-minute chart, you have lower lows, lower highs until the market no longer obviously makes a lower low. On this occasion, it hasn't made a lower low. It's tried on multiple occasions to do so. It has failed to do so until you get a short squeeze going into the close. Okay, so that's a bullish sign. Okay, a bullish sign. Also, from a technical perspective, we've put in a pivot low now. We need to go higher. So we have two gaps that we must close. We have a gap up here at 2080 region, and then we have a gap here around the 2065 region. So 2080, 2065, those two gaps must close. Therefore, price action would attract us towards those two levels. Watch out for 2065, watch out for 2080. That's all I will say from that perspective. Okay, folks? That's basically a summary of price action on the S&P 500. Now, how do we corroborate the strength and weakness on the S&P 500? We look at the actual Russell. Okay, so the Russell is the important chart that everybody should be looking at and observing, those that are obviously new to this game. And what does the Russell tell you? The Russell tells you that it's basically bullish. It doesn't care about the S&P 500. It's bullish, outright bullish. Can you see how the S&P is languishing at its lows? And what's Russell 2000 doing? It's languishing at the highs. What does that tell you? It tells you it's consolidating and on the verge of breaking out. It has been a laggard, but now it wants to be the leader, which is a bullish sign for US markets. Hope I'm clear with regards to that, folks. Okay, I expect the Russell to break out and lead the S&P 500 higher based on my presumptions. So you know my presumptions, which I've gone to great extent to try to explain to you. That's just my thought process and understanding with regards to this market right now. The Russell 2000 has been a laggard, has been very weak in terms of leading the US markets higher. It now has taken it upon itself to be the leader and send the US market higher. And you can see in the weekly chart, very bullish. It consolidated at the highs. There's no argument for this to be bearish, full stop. Okay. Yes, if we hold this double top resistance and then the S&P 500 breaks that key trend line and we go lower and the dollar keeps going higher, the euro keeps going lower, that's fine. We must adjust our obviously trading bias and trading understanding and obviously switch to the short side, and then I'll discuss exactly what's going to happen there. Now let me look at these smaller time frames, because my premium version of Pro Real Time, which is a shame really, doesn't actually give me the Russell. It's not part of, you can't even choose it as part of the exchange, you can't even add that on, unfortunately. It's just, it is what it is. So I go to my 60-minute chart here, my IG index. Bear with me, 60 minutes. Bring this up. Okay, so 60-minute chart at this very moment in time. We're just basically consolidating here. I mean, what I can see here clearly is a break of an inverted head and shoulders formation on this Russell. You can see the left shoulder here. Obviously, we're going to put in the head, and now we're looking at a right shoulder before we eventually break out higher. Okay, and that's basically where we are. And that's basically our thought process with regards to that. Okay, that's basically how we're understanding that. Okay, 10-minute chart. Again, obviously we pushed lower. We held the 200 MA, potentially close this gap below, and then obviously pushing higher. So we watch the resistance level and see if this market can continue to break higher, okay, from that perspective, from the Russell. Okay, now let's go to the Dow now. Now I've covered that. Dow Jones, again, we're in this falling, expanding, contracting wedge pattern again, which is a bullish sign. Held a double bottom again, which is a bullish sign. Again, flush lows on higher volume, very similar. And as you can see here, rise with that stronger volume. Okay, so daily chart. Daily chart again, very similar. Held this key trend line. Inside bar, holding the 50% support level, very strong. Okay, now let's have a look and see if it corroborates with the actual Dow Transports. Again, this is interesting. Inside bar. Okay, we've bounced for this pivot low here. Inside bar. This is a laggard. Can this be the leader? We need this to be the leader to really confirm the move higher. So again, this is going to be very interesting going forward. Okay, with regards to the Dow Transportation Index. For now, on the 60-minute, and obviously on the daily chart, it's certainly pointing a potential bullish sign. What's the situation with regards to the 60-minute chart? It's complete this H&S formation, which we all know now, so I'm not going to keep going on about that. I did warn you all with regards to that. Now we are looking for a potential inverted head and shoulders type pattern. So same concept here. You've put your left shoulder in here. You're looking for a head, obviously, which we've got here. We've bounced, fallen at resistance there. Now looking for an inverted head and shoulders, same as Russell 2000, looking for a potential move higher, given the fact that the dollar is now going to start to fall. Okay, and that will be the main catalyst for an inflated move higher. Okay, folks. And those that you know on my swing analysis, swing trading service, I'm actually swing long the Nasdaq from 4,300 regardless. Okay, right. So this is basically where we stand from that perspective. Okay, that's the transportation index. Right, now the next index that we observe is a Nasdaq, and that's going to be the key. Okay, so Nasdaq again, key diagonal trend line support, previous resistance equals support, gap fill support, 50% support, and that's multiple reasons why I've gone long the Nasdaq at 4,300. Inside bar doji indicating exhaustion, unfilled gap above at 4,410. That gap needs to close. Okay, so from a daily chart perspective, can you see how many arguments I have for a rally? Okay, inside bar 1 argument, doji 2 arguments, gap fill 3 arguments, previous resistance equals support 4th argument, 50% support 5th argument, 6th argument, diagonal trend line support. I'm not even going to go into intermarket analysis. Forget that. This is just technicals. Overwhelming arguments to go long. Okay, I'm not even going to go into Apple, Amazon, Google. I can go into that. Forget it. This video, I'll be here all day. Okay, so just giving you an insight, and it's already taken what, almost half an hour. This is analysis, folks. This is how you should analyze the market in your spare time. Okay, anyway, 60-minute chart again, gap fill. Obviously we've held. I'm not going to elaborate on volume. I think I've already explained my concept there, but the most important thing is that we've held gap fill, and you've had a bullish engulfing candle as well. Okay, so double bottom, bullish engulfing candle, unfilled gap above. We need to track that. H&S formation has been complete. I'm not going to keep rabbiting on about that now. Get rid of that. I did warn everybody in advance with regards to that. Okay, so here we go. We no longer need this. We no longer need this. Obviously this gap level is important, so and previous resistance equals support, by the way, as well, folks. So gap fill plus previous resistance equals support. So overwhelming arguments on a 60-minute chart. Okay, add in the volume factor as well. Okay, 10-minute chart. This is interesting. Okay, so let's see if I can try and elaborate on this. Okie dokie. So first of all, as you can see, folks, the rising volume, key factor here, very impressive. I mean, that certainly is a good sign from my perspective. Those that you are understanding and respecting volume and utilize volume in your trading ability, etc. Okay, so this is your diagonal trend line, as we can see here. Okay, which has been respected. You've got this line here, obviously has broken out, so you've broken out of this falling wedge, etc. pattern. So where do we need to go next? Okay, good question. So first of all, you're looking at this resistance level here at 43.50. Then the next ultimate level is going to be gap fill at 44.12. Okay, so that's basically where we stand with regards to the Nasdaq. Okay, so overall everything is bullish. I think I'm going to call it quits here with regards to this video. It's long enough now, folks. As you can see from a technical perspective, we are expected to move higher. Risk on, risk off, wax on, wax off. Goodbye now.